What's up, guys? This is chloeshook and chrisshea with the Shea Group, and today we are doing our market update for quarter one of 2023. So, we're going to talk about some of the local data, what's going on here in Columbus, and what that means for buyers and sellers. And then, towards the second part of the video, we're going to talk about kind of how Columbus compares on the national scale when it comes to the top 50 markets across the nation. Ready to get started?
I'm ready.
All right, I hope you studied. This is interview style, so
Monday
I'm
morning.
asking the questions and you're answering.
It's Monday morning, so go easy.
Okay. All right, so what a lot of people want to know, especially buyers in this market, is should they buy now or should they wait for rates to drop? What do we think?
Well, the standard answer is it depends, right, on everybody's situation. Now, I would say across the board in Columbus, it's a great time to buy. Never wait. If you find the right deal that fits with your parameters, there's no reason to wait. We're not in a bust situation where everyone's waiting for that, so buyers are going to have this great opportunity. It's not going to happen. So,
Right.
to me, as Columbus continues to grow, things are just going to go up from here. So there's
Right.
plenty of studies that show anybody that gets in and buys now versus renting ends up in a better position down the road,
Exactly.
regardless of if there's little fluctuations along the way. So,
Right.
So I would say that the general answer is yes, but I still say the caveat is it depends on the person's situation. We would always have to analyze that too.
Right. Every person is different, every home is different, even little local markets within Columbus,
Right.
it varies. I would say that, I wish at 5.5%, it's a little easier to say, oh yeah, great. I think you just have to adjust your expectations and, buy something that's within your means.
Exactly.
Maybe last year you could get a $400,000 house and now it's more like 300.
Now,
So if you buy with something that's affordable for you, something you can maintain, and you plan to stay there, of course it's better to buy now than wait.
well, and to speak
Right.
to that, I'll give an example. I sold a house on the Shea Group. We sold a house in December in Dublin for $400,000. Buyers got it just over list price, maybe $5,000 over list price. We had a remedy request and got 10 items fixed.
10 items?
Probably 5 to 10 grand worth of stuff fixed
That's
before they moved
a
in.
laundry list. That's
Right.
a honey-do list. 10 things.
Plus, we closed, without any buyer concessions to the seller. If this same house would have sold in April of last year, they would have paid $450. Had to pay 50 grand cash in a gap. So what I tell buyers is look at it like this: this buyer got this for 400. Okay, the rates are higher. They're paying 200 to 250 more a month than they would have the previous April. However, they're 50 to 60 grand less out of pocket between price point and that stuff they would have had to repair themselves. Because
Right.
last April, no one was taking a remedy request.
No,
Now
absolutely
they can.
not.
So, I
what's-
look at this
yeah.
and say, is it better for a buyer to get the lowest rate? Are we buying cars here or are we buying houses? I'd
Right.
much rather have the equity built in.
Absolutely.
And they agree. If they still qualify higher, okay, it's a little more per month, but they saved 60 grand that they would have paid last
Right.
April. So that's
And
why I
what's
say it's
the
still
break
a time.
even point on $250 a month for 60 grand?
A long time.
Long time.
Right.
Yeah.
And when they go to sell, now they're not selling it for a loss if we do have a correction because they overpaid.
Exactly.
So to me, it's a trade-off. Now, the issue is, can you afford the 250 higher? If you can't, now you're instead of 4, you're buying 350. But again, like you said, that's not terrible either. As long as you're buying something right, it's always the right time to buy.
Right.
And we can help with that.
Absolutely. So what are some of the things, just briefly, we don't have to get too in-depth here, ways to save on an interest rate?
Okay.
What are we thinking about that?
Well, we run a lot of options on that. The banks now are all pushing these buy downs, 2-1 buy downs. You and I both analyzed that.
Yeah.
I don't hate them if
Depends
the
on the
seller
situation, yeah.
lender provides them. I never want a buyer buying down their own rate because the amount of money they would pay to do that, they'd rather take it in closing costs.
Comes
or
down
pay-
to that break-even point again.
Right. So now for affordability, typically on a 2-1 buy down, they're still going to have to qualify for that third year. But I've gone through it right now with someone. We made an offer yesterday. they're comfortable at $2,500 a month, or I'm sorry, they're qualified to $2,500, but they're only comfortable to about $2,200. So I brought up this buy down. We asked for a seller's buy down of $5,000, about 2% of the purchase price, and that would buy their rate down to where their payment the first year would be $2,200, the next year $2,300, and then that third year like $2,400. So, and they were completely fine with that because they know they're going to be ramping up their savings or their income. So
comes down to the situation, buyer.
Again, and our offer was not accepted, but the good news is now that they've upped their game like this, last offer we were number 6 out of 7 offers. This time we were number 2 out of 6 offers.
Getting closer.
Getting closer. And and we help again with solutions like that on things that buyers can do to get competitive.
Absolutely. And now, one last thing for buyers, just be how competitive is the market right now. What I've seen is you still have to make a quick decision, but we're not talking about 10, 20% over the asking price, waiving the appraisal, waiving the inspections. Exactly. So we're still making quick decisions, just not irrational ones.
And I agree with that. I agree with that, especially on new listings that are move-in ready to go. As we hit the spring market, that's going to be the case, and with the low inventory, it's definitely the case. You just held an open house this weekend, right? What kind of traffic did you get?
Revolving door.
Yeah,
there was a line out the door when I got there.
And that was Sunday. Saturday, we had already had 30 showings. So we're going to go into contract right away. We did this morning on what we got. 8 or 9 offers, and we're in contract right away. Now that's going to happen because of low inventory on the ones that are ready to go.
Yeah.
But on a buyer side, the plus is there's more and more that are having price adjustments and coming down, and more sitting longer. So I think finding opportunity for the right purchase is out there again versus everything going off the market regardless. You used to be able to sell a cardboard box with a can in the corner and get top dollar.
What were we talking about? The those pre-made sheds that they have outside of Home Depot, Lowe's outside.
Start selling those.
Start putting our for sale signs up out there.
Move in ready.
Right.
Exactly.
Well, that's a good segue into for sellers. Is it a good time to sell? Is it a bad time to sell? Now that rates are higher, are there less buyers? What would you say for sellers right now?
Yes, my experience and what we're seeing and talking to other agents too is that some buyers have decided to hold and wait, and unless they're being educated by their agents to, get out there while there's less competition. But on the sell side, I just kind of spoke to it. If you've got a house that's, there's a sweet spot. Obviously, in Columbus market, if you're in that, can you find a house under 250? But if you're in that 250 to 350 range, you got high demand. If it's a complete gut job, that cuts your demand less than half, because people want to be able to move in, live there. If they've got to do some cosmetic upgrades, fine. So I would say sellers that have a house like that, for sure. We're seeing investment properties that are flip properties, maybe sitting a little longer. But I would say, even though the rates are like this, it's the best time to sell. I mean, you had some stats on that.
Yeah, so it is a better time to sell right now than it was the second half of 2022. I think we've gotten over that initial panic of rates rising.
Good point.
And because the inventory is so low right now, buyers have fewer options, it's still a good time to sell.
That's a great point. The inventory, I ran numbers, we run numbers all the time. Chloe and I are number geeks, but last week the numbers were showing me we had, I think when I pulled everything on the market, there were 5,400 homes. And when I pulled just active that weren't in contract, it was 1,900. So when you look at that number, not even 40%, so 60% are in contract, low inventory, 1,900 homes. I mean, they used to say we had to have 5,000 to be balanced. Well, the new norm is not that.
Yeah. That's
not
changed
that.
too.
It's low inventory, high demand. So
absolutely.
If you're a seller, and then on top of that, we are hitting the peak right now, March, April, May.
In terms of seasonality patterns.
Right.
Yeah.
So it is the time in Columbus to sell.
And I think too, I was talking to some people at the open house yesterday about, in the market that we were in where everything was flying off the shelf, you couldn't get a home sale contingency accepted.
That's true.
So, the problem that people were having in the past couple years was, okay, I'll sell my house, it'll sell in 24 hours, but where the heck am I going to go?
Yeah.
Where, you had to find some kind of temporary housing situation or have the buyers let you stay there past closing.
Right.
But now it's more like you could probably get a home sale contingency accepted in certain scenarios if you do it the right way, and then that would make for a smoother transition, and you're still going to get, top dollar, close to it for your home. So I think that makes the transition a lot easier.
And the one you just held open, we got 8 or 9 offers, and 2 of them had home sale contingencies. Again, if there's a lot of competition, that makes it hurdle to get over. However, last year, you couldn't even consider that.
Yeah.
We are starting to see those again.
Absolutely.
Especially, I would say, again, back to the buyers, if you find, or if you're thinking of selling, but you find a property that's been on the market a while, that might be one that would take a home sale contingency, and then you could get yours on the market.
Yeah. And the ones that are sitting on the market a while are not, second tier, third tier homes.
No.
It's just, the market's kind of adjusting to, the new normal.
Right.
So, before, like the houses that were sitting on the market for 2 weeks a year ago, I mean, gut job,
you can push them over, right? They were in such bad shape, you'd probably walk up and push it over. But to speak to that, you're exactly right in that, we've gotten accustomed to if something was on the market more than a week, it's something's
wrong with it. Yep.
That's not the case. I mean, it used to take
it's haunted.
It used to take a long time for a house to sell. Now we're like, oh my gosh, 30 days. What's wrong with it? I still tell my buyers those are the best ones to find your best deal for sure, because you got motivated sellers
might be,
at that point.
panicking a little bit, wanting to get that moved.
On the seller, if I had a house to sell and I was debating on this year or next year, I would sell now. Yes. Now, I don't think that we don't have a crystal ball. Doesn't mean next year will be way worse. I'm not saying that. I'm just saying I know it's good now, so why would I roll the dice and wait to see if it's good later?
Right.
But again, a seller has to then know, well, what can I do? Why do I want to give up a 3% mortgage, 4% mortgage to move into 7%? Right. Well, if you've got enough equity, a lot of times you can get the house you want using the equity from that home you sell, and then obviously you might have a higher rate on that mortgage, but if it's a lower enough amount, it might not hurt you on that.
Absolutely. Yeah. Well, I think we've covered a lot for buyers and sellers. Let's maybe move into some of the national data.
Sure.
So one of my favorite podcasts that I listen to, it's called The Reconomy. They did a study on the top 50 markets across the nation, and they kind of put them into 4 different categories. So we'll just go through each one with an example. So category 1 would be a market that had a boom and a bust. Okay. So this would be somewhere like Boise, Idaho, Phoenix, Arizona. They've seen an incredible amount of growth, and they are, in the pandemic, for pandemic-related reasons.
Right.
And now they're, seeing a pretty large correction.
And what do you mean by when you say bust? Because that can mean
let's
like
define
markets
that.
falling out of the bottom. What does that mean?
So what they used to define that is they took the average, well, first of all, to define boom, they took the average growth rate across these 50 top cities. And if you are above the average, you're a boom. And if you're below the average, you're not a boom. But that average was
41%.
41%
increase.
Right. 41% increase
year.
from February 2020 to the peak, whenever they peaked. So, I mean,
a year and a half,
when we talk about no boom, when we get to that category, I mean, it still could be 37% growth rate, which is absolutely a boom. Yeah. So we're really talking super relative. Boom or small boom.
Right.
Yeah. So
I gotcha.
For Phoenix, Arizona, Boise, Idaho, big boom, big bust. Now, on the bust end, they're defining that as 2% is that average.
2%.
Negative 2% from the peak to now.
Oh, okay. So
2%.
Bust might be a little strong, right?
Bust or slight correction.
Well, but again, I think, like you
relative,
said, they're making it relative because the rest of the markets are still going up. So they're calling that a bust if they're going down. And I've heard that about Boise, Phoenix, Denver, I think might be one. So okay.
So that's the boom and bust.
Okay.
Now let's talk about no boom but bust. This is what we're seeing in a lot of already overpriced markets that didn't really have extra reasons to grow during the pandemic. such as San Francisco.
Gotcha.
People want to get out of there and buy where, their purchasing power is higher, like Florida. So,
and Boise, a lot of them were moving to Boise.
Exactly. Yeah. And then we have boom, but no bust, such as Miami. Miami had a 55% growth rate from February 2020, and they have not peaked.
Okay, so
Which
boom,
makes
no bust
sense.
means they're still going up.
Yeah, no bust. They're still going up, pretty
Gotcha.
much. And then the last category would be no boom, no bust. So no harm, no foul.
Or
Places like New York, they had a lot of people moving further out to the suburbs since people are working from home. They don't have to make that commute. So.
But they didn't really see a significant jump, is what you're saying.
Well, 31%. I mean, that's still pretty significant. But again, it's
but
all
again,
relative.
in their definition. Okay.
Mm-hmm. Yeah, and then they have a negative 0.3% decline.
Okay. So yeah, like you said, then even though they're calling this a bust, it's all relative and it's more of like a correction.
Exactly.
Which we all knew healthy. We needed that for a healthy market.
Yeah.
We had a runaway pricing everywhere. So now, what's
So where
your
do you
take on
think
Columbus?
Columbus
Yeah,
falls? I want to know your take.
I mean, I don't know. Well, again, on the 41%, I don't know the numbers there, but I would say, if we're not bust, we're close to bust, if we're not booming, we're close to booming, and then I don't think we're going down anytime soon. Between Intel, Honda, I keep hearing us be likened as the Silicon Valley of the Midwest, which I don't know, with the SV Bank thing, maybe that's not a good thing, but
Right. Let's pick a new,
name.
yeah.
Let's just call it something else. But with the growth we're seeing, I don't see that going away. The demand here, low inventory,
Yeah.
and then our pricing. When you look at other major cities, we both sell in Florida, and we see $1,000 a square foot.
Right.
We're nowhere near any of these.
Just
kind
came
of
back.
major
I'm like,
city
man,
numbers.
it is cheap around here.
It's crazy. And then when you see
You can't hardly get a single family home for under $1 million in some markets
Some
in Florida.
markets,
Yeah.
it's true. And
It's
other
nuts.
cities the same.
Right.
So people move here. I just sold one. We closed today actually. They moved here from Seattle, and they sold their
Expensive to live
1,200
there,
square
yeah.
foot home. Multiple offers. They sold it to a cash buyer from they listed it at $695. They sold it for $825, and they're moving here. And what they're buying, it's 1,200 square foot home. What they're buying here is a over 3,000 square foot home in Worthington Hills for $560, and they're ecstatic.
Right.
It's
All relative.
It's all relative.
Yeah.
So in Columbus, we see this. Oh my God, pricing's so high because we were used to 180 a square
Right.
foot. Now that we start going up, we're like, oh,
We're
that's
jaded because we remember when the prices were, lower.
way lower. So it is
Columbus,
relative.
in terms of the numbers, we have, and I don't know the exact statistics that they use to calculate this, so this
Okay.
might not be 100% accurate, but Columbus did have a 37% increase in price per square foot from February 2020 to right now.
Just on average. Okay.
And, 37%, again, that is close to that 41%.
Yeah.
I'd
So
call 4% pretty close.
they're not calling us boom, but we're near boom.
Yeah, we're
in
boomy.
in their thing,
Yeah.
in their criteria. I mean, any other time in. That's huge
Yeah,
boom.
absolutely. And then we have not seen a peak happen just yet in our price per square foot. So I'd call us boom, no bust.
Yeah.
And I think that's because a lot of the reasons for our growth is not pandemic related. We've got a strong local economy, like you just mentioned.
Ohio
Honda,
State,
Intel, Ohio State, exactly.
Huge
And,
insurance companies
Right.
nationwide.
I mean, they're not coming here for the weather. So,
No, and if you could see outside,
right,
you would know
it's-
that.
yeah,
Dreary and rainy.
right. But
But the
Yeah.
opportunities between a great place to raise a family, the schools, Ohio State, all the job market, it's a great city for that.
absolutely.
Not the weather, topography. I always tell people
No.
flat and rainy and gray.
But great place to invest, you know?
True that.
Yeah.
We work with a lot of investors that are buying in Columbus. Cap rates are much better than other cities.
Absolutely.
But back on the residential, I mean, with what you said, and you weren't in the you weren't in the industry, I don't think in 07, 08, but I'll tell you, like back then, when
Didn't have a driver's license back then, so,
you
a little hard to be a
sell
realtor.
reals, yeah. When it busted, then you definitely saw this fall off a cliff. Lenders were throwing out loans and people were defaulting. Again,
Yeah.
we're not seeing any of that
Yeah,
because
our labor market's still strong.
Mm-hmm.
It's still hard to find a good, contractor or somebody to do projects like that.
right,
People have equity in their homes,
Right.
and we don't have the irresponsible lending
right.
guidelines.
And,
So,
and if somebody were to get in trouble, they could sell their home so quick that we're not
Absolutely.
going to see this. If buyers are on the sidelines waiting for this glut of foreclosures to
happening.
come so they can invest, it's not going to happen. Now, do I say don't hold on to some cash if you're an investor? I don't ever think it's a bad idea because then the right opportunity comes and you can use it. But
yeah,
But I've got countless investors that sat during this boom waiting for prices to come down, and they're kicking themselves because if they got
they've
in,
only gone up.
and
Yeah.
if they would have got in 3 or 4 years ago when I was trying to get them in, they would have had this run up,
Right.
and 1031 into the next thing and the next thing. But
Yeah. There's
some
no
do and some
perfect
don't.
deal out there. You're never going to find that. That's what you're looking for, whether you're an investor or an owner occupant, which is still investing.
Right.
It's not about my favorite saying. What am I going to say? It's not about timing the market. It's about time
In the market.
That's right. We'll work on that for next time.
Yeah.
Yeah, I know.
We gotta have a
That's
little
good,
better
though. Yeah, well,
flow. I would say, with what you just said on that, is that for buyers that are pondering that, like you just said, a home, even if you don't look at your home as a monetary investment for gain down the road, obviously there's always that intrinsic value, and that's where we come in and help you learn. Okay, what's the market going to support down the road and all, because typically even if it's not your intended investment, it's 90% of the people it ends up being their biggest investment over
Absolutely.
time. Their biggest amount of equity or
forced savings. You got to pay your
it's a
mortgage
forced
every
savings
month.
if you want to live, if you want to not be homeless, right?
Right.
And
Exactly.
so we look at it from that perspective and want to make sure we're educating our buyers and sellers on, especially buyers, on buying it right. And I think that's where we come in. Now there's also always the intrinsic value, emotional
Right.
value. If it's a
Right.
home, I always
We can't
call
put a
it,
price on that. Yeah.
is this your fall on the sword home? Like, we're going
Right.
all in. I don't care what we pay because I'm going to get buried in the backyard. Then
Right.
let's stop worrying about overpaying by $5 or $10 grand.
Absolutely.
But-
Well, our job is to take a look at your situation, give you the facts, and help you make the right decision that's best for you and your family.
Correct.
Right?
And I realized as I'm talking, I haven't looked at the camera a lot, but sorry,
Yeah.
people. I'm saying
He's
words,
talking
but
to you.
I'll learn to talk to you better next time.
All right. I think that was pretty good. I think
Very
that's all
well.
we've got for today.
Sounds good.
If you're looking to buy or sell or invest in the Columbus market or Southwest Florida, more on that later.
More on that later.
Feel free to reach out to us. Information's on the screen, or you can browse homes on our website in the link below. Thanks for watching this video, and we hope to see you in the next one.
Have a great day.